Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, certified financial planner and owner of Elevation Financial. As always, I'm on the web at elevationfinancial.com. You can find me there, and there's links to all my social properties where you can find me there as well. Today, the process and timeline for buying your first home. I've been talking to a lot of people about buying a home recently, and so it was a timely topic. Wanted to talk through this today. So owning a home is a dream that a lot of people have. It represents security, independence. It's a tangible asset. Many people see it as an important milestone in their financial journey. And, a lot of people just want to own a home as a goal, as a milestone in their life. And there's a whole rent versus own argument out there. And, there's pros and cons to renting and owning. And I generally am very pro owning a home. I think it's great to build equity. I think it's great to purchase something, assuming it fits within your financial situation properly, and it's a good decision for you financially. I think owning a home is great. I'm very pro home ownership. For first time home buyers, though, that journey and that path to getting your own home, it can come with some complexities, lots of decisions, sometimes intimidating process and timeline. So we're going to talk through that today. It's one of the most significant financial commitments you can make. And so really understanding the steps involved can really help demystify the process and make it more approachable. So we'll talk about determining your budget, securing pre-approvals, house hunting, closing, a lot of steps to consider along the way. So let's dig into the process and the timeline for buying your first home. First, understanding your financial readiness. So before you begin the home buying process, it's really important to assess your financial readiness. This involves evaluating things like your current financial situation, income, expenses, your credit score. Understanding your financial standing is going to really help you determine how much home you can afford to spend and what type of mortgage you qualify for. So you want to start by reviewing monthly income and expenses. Calculate how much you can comfortably allocate toward a mortgage payment without stretching your budget too thin. So there's a few rules of thumb that can help. One set of guidelines includes the ratios used by mortgage lenders. So when lenders evaluate a mortgage application, they typically look at two key ratios to assess the borrower's ability to afford the loan: the housing ratio, also called the front end ratio, and the debt to income ratio, or DTI, also called the back end ratio. So these ratios give lenders a snapshot of your financial health and help them determine how much risk they might take on lending to you. So here's an overview of what they mean. So housing ratio, which is also called the front end ratio, is the percentage of your gross monthly income that goes toward housing expenses. That includes your mortgage payment, principal and interest, property taxes, homeowners insurance, and possibly HOA fees. So the typical requirement is that most lenders want that ratio to be 28% or lower, but it can vary based on the type of loan and the lender's specific criteria. So the 28% is kind of a rule of thumb. It's a guideline that's pretty common. Some lenders might accept higher ratios, especially if the borrower has other compensating factors like a high credit score or significant savings. The debt to income ratio, abbreviated as DTI, and also called back end ratio, considers all of your monthly debt payments, not just your housing related ones. So this includes credit card payments, car loans, student loans, other monthly debt payments, in addition to your potential mortgage related expenses. So the typical requirement here is most lenders look for a DTI of 36% or lower, but it can also vary. Certain loan programs like FHA loans, for example, might allow for a higher debt to income ratio, and sometimes even up to 50% in specific cases. So again, that 36% number is more of a common guideline, but it can vary. Remember, while these ratios are guidelines that many lenders use, they're just part of the picture. Lenders also look at factors like your credit score, your employment history, your savings, and the type of loan you're applying for. If one aspect of your financial profile is weak, a strength in a different area might help compensate for that. So always consult with a mortgage lender professional to kind of understand how lenders view your specific situation. It's also important to consider additional costs that go with home ownership, things like property taxes, insurance, and maintenance. Keep in mind, this is super important. While you might be eligible for a mortgage based on certain ratios, that doesn't mean it's how much house you can truly afford. This is why it's important to evaluate your budget based on your cash flow, and other factors in your life, not just these ratios. So next, check your credit score. A good credit score is essential for getting a favorable mortgage rate. If your credit score is less than ideal, you want to take steps to improve it before applying for a mortgage. So this might involve paying down some debt, making all payments on time, correcting any errors in your credit report, and cleaning up things like that. So once you have a clear understanding of your financial situation, you're better equipped to move forward with the home buying process at that point. So buying a home is a long-term commitment, so you want to make sure you're really prepared and really financially ready for it. One resource I really love when you're evaluating your home buying budget is the home buying budget calculator from Freddie Mac. You can just Google that, you'll find it. And it helps you determine how much house you can afford based on your financial information. One really useful way I like to use this tool is to set a budget based on monthly payment rather than income. So in the tool, you can choose between income or monthly payment as a starting point for determining your budget. And once you've determined how much of a monthly payment you can afford based on your specific cash flow situation, it'll help you set a realistic home budget. So I really like that because you're basing it and kind of reverse engineering it from what you've already determined in your budget is a comfortable payment. And that's a really good way to set your home buying budget. Next, let's talk saving for a down payment. Now that you know your financial readiness, it's time to start saving for your down payment. A budget can help you prioritize your expenses and allocate funds toward those goals. So first, track your monthly expenses, identify areas where you can cut back. You could reduce discretionary spending, renegotiate bills, find ways to save on other expenses. And by making those little adjustments, you can free up more money to put toward your down payment if that's something that would be helpful. Set a goal for your down payment. Most lenders require a minimum down payment of anywhere from 5 to 20% for the home purchase. So hitting 20% is ideal if possible, at least. That allows you to avoid PMI, which is private mortgage insurance, and that'll potentially secure you a lower interest rate. So in addition to a conventional mortgage, many first-time homebuyers might want to consider an FHA mortgage. And it's not right for everybody, but it is an option. So an FHA mortgage is a type of government-backed home loan that provided by lenders, but insured by the Federal Housing Administration, FHA. This insurance makes FHA loans less risky for the lenders, which allows them to offer more favorable terms. And here are some key features of FHA mortgages. First, lower down payment. One of the biggest draws of FHA loans is the ability to make a down payment as low as 3.5% of the purchase price. That's 3.5%, depending on your credit score. Also, there's some credit flexibility. FHA loans tend to be more lenient with credit score requirements. So if you have a lower credit score, you might still qualify, although you might be asked to make a larger down payment. Also, mortgage insurance is something that comes with FHA loans because the lower down payment and increased risk. FHA loans require two types of mortgage insurance premiums. One, upfront mortgage insurance premium. It's a one-time premium paid at closing, and that can be financed into the loan amount. And then second, annual mortgage insurance. This is a recurring yearly premium split into the mortgage payments and added to your regular mortgage payment. The exact cost is going to vary based on the loan's terms and the loan to value ratio. Also, loan limits. FHA loans have limits on how much you can borrow. These vary by region and they're adjusted annually. The limits are based on local housing market and are meant to ensure the program serves low to moderate income borrowers. So there's a tool you can use to find what the FHA loan limits are for your area. It's the FHA mortgage limits tool from the U.S. Department of Housing and Urban Development. It's linked from the article version of this podcast episode, or Google FHA mortgage limits from HUD, H-U-D, and you'll find it. It's pretty easy to find. And you can type in your zip code or your region or your city and state, and it'll tell you by region what your FHA mortgage limits are for your area. There's also an owner-occupied requirement for FHA loans. FHA loans are typically for owner-occupied properties, which means you're expected to live in the property as your primary residence. There's also property standards. Homes purchased with an FHA loan have to meet specific safety, efficiency, and habitability standards. If a home doesn't meet those standards, any issues have to be addressed before the purchase. There's also refinancing options. FHA also offers streamlined refinancing options for existing FHA borrowers. So there's often reduced paperwork and reduced underwriting requirements for refinancing. And there's a variety of loan types. Most associate FHA with traditional fixed rate mortgages, but they also can be for adjustable rate mortgages and other types of loans. So FHA can be an option. They're particularly popular among first-time home buyers because of the lenient requirements for down payment and credit score flexibility. So it's really important, though, to weigh the pros and cons, especially concerning the costs associated with mortgage insurance when you're considering that type of loan. So always consult with a professional when going through this and look at your options. Also, when saving for the down payment, consider opening a separate savings account dedicated to your down payment. This will help you keep your savings organized and segmented off and prevent you from dipping into the funds for other things. So automate those regular contributions to the account, and that'll help you ensure consistent progress toward your savings goal. So saving for a down payment takes time, it takes discipline. So you got to be patient, stay focused on that goal. Every month you save into that down payment fund, you're one step closer to getting your home. So next, let's talk about getting pre-approved for a mortgage. So once you've saved for a down payment, it's time to get pre-approved for your mortgage. This is your next step. A lot of people jump straight to house hunting before they get pre-approved. That's a mistake. Get your pre-approval first. So pre-approval is an important step in the home buying process because it demonstrates to sellers that you're a serious buyer and you've got the financial means to make an offer. So to get pre-approved, you'll need to gather your financial documents like pay stubs, bank statements, tax returns, and these documents provide your lender with a comprehensive view of your financial situation and helps them assess your borrowing capacity. Next, reach out to multiple lenders to compare rates and terms, and this will ensure you get the best deal possible. So provide each lender with the necessary documents they ask for and complete the application. The lender will then evaluate your financial information and provide you with a pre-approval letter stating the amount you're qualified to borrow. So having that pre-approval letter in hand will give you an edge when making an offer on a home. It gives you a competitive edge. It shows sellers that you're ready to move forward. You're able to move forward with the purchase. And keep in mind that pre-approval is not a guarantee of a mortgage loan. You'll still need to go through the formal application process once you find a home and have the accepted offer, but it does show the seller that you're serious and you can make an offer and move forward quickly. So one question many couples have at this stage is to ask if both people should be on the mortgage. So if you're an individual buying a home, the question of who's on the mortgage is pretty simple. It's you. But if you're a couple, you have the option to have both of you on the mortgage or just one of you. If both partners have a good credit score and strong income and they want to both be on the mortgage, then it can be advantageous to apply as a couple since this can help you qualify for a higher amount, assuming that fits within your budget. However, if one partner has bad credit, it might make sense for the partner with a good credit score to be the only person on the mortgage so you qualify for the best rate. But note that even if only one person is on the mortgage, both partners can be listed on the title if that's what you want. All right, next, once you've got the pre-approval ready to go, find a real estate agent. So now that you're pre-approved, it's time to find an agent who will guide you through the home search and negotiation process. A good real estate agent will have a deep understanding of the local market you're looking in and access to a wide range of properties and also strong negotiation skills. So you want to start by asking friends and family. It's always a great place to start. Personal referrals are often the best way to find a reliable, trustworthy real estate agent. You can also search online, of course, for agents in your area, read reviews, etc. So once you have a list of potential agents, schedule interviews, get a sense of their experience, their approach, ask about their knowledge of the market, their availability, their track record. So it's really important to find an agent who understands your needs and is really committed to helping you find the perfect home. You'll be working closely with your real estate agent throughout the process. So make sure you find someone you feel comfortable with and you trust, and take your time. Choose an agent who aligns with your goals and priorities. All right, searching for your dream home with a real estate agent and your pre-approval letter, you're ready to go. It's time to start searching. So identify your must-haves, your deal breakers. Consider factors like location, size, number of bedrooms, amenities. Look for what's important to you. Make sure you identify what's a deal breaker and what's not, because you're never going to find the perfect home with every box checked. So look for things that are your deal breakers and make sure that all your deal breakers aren't unreasonable. Make sure you have enough things that you're flexible on. Your real estate agent will set up an automated property alert based on your criteria and will schedule viewings for those homes that most interest you. So take your time, visit each property, assess its suitability. Don't be afraid to ask questions, voice concerns. It's a big purchase, so make sure you really take your time. And as you visit different properties, keep an open mind. Sometimes a home might not check all the boxes, but has the potential to become your dream home with a few modifications or potential updates. And so trust your real estate agent's expertise and consider their suggestions too. So once you find a home that meets your criteria and feels right, it's time to make an offer. So we'll move on to making an offer and negotiating the purchase price. So when making an offer on a home, it's really important to strike a balance between getting a good deal and not alienating the seller as well. Your real estate agent will help you determine the appropriate offer based on market conditions, comparable sales, and condition of the property. In addition to the purchase price, your offer might include contingencies like satisfactory home inspection, appraisal, and financing. And those contingencies protect you as the buyer and give you an opportunity to renegotiate or walk away if significant issues are uncovered. Your real estate agent will present your offer to the seller's agent, who will then communicate to the seller. And the seller can then accept, reject, or counter your offer. So negotiations at this point might go back and forth until both parties reach a mutually acceptable set of terms. And remember, negotiation is a delicate process. You got to remain respectful, be open to compromise, trust your agent's guidance and expertise through the process. All right. So next, completing the home inspection and appraisal. So once your offer is accepted, time to complete the home inspection and appraisal. The home inspection is an opportunity to assess the condition of the property and identify any potential issues or repairs that might be needed. So hire a licensed home inspector to conduct a really thorough examination of the property. The inspector is going to check, systems of the home like plumbing, electrical, HVAC. They're going to check for structural and safety issues, and they're going to provide you with a detailed report highlighting any issues or concerns. At the same time, the lender will order an appraisal to determine the fair market value of the home, and the appraiser will visit the property, evaluate its condition, the location, comparable sales in the area. And the appraisal is really important for the lender to ensure they're not lending more than the property's worth. If the home inspection or the appraisal reveals significant issues, you might have the opportunity to renegotiate a lower purchase price or negotiate repairs. So your real estate agent will guide you through that process. They're going to help you make informed decisions about that. All right, next, finalizing the financing and closing the deal. So with home inspection complete, appraisal complete, it's time to finalize the financing and close the deal. This involves working closely with your lender to provide the necessary documentation and complete the mortgage application process. So the lender will review your financial information, order a title search, prepare the necessary loan documents, and you may need to provide additional documents or explanations if requested at this point. So be responsive, be proactive, check your email regularly, respond to texts and phone calls, like be on it, be very diligent and responsive during this stage to make sure the closing process is smooth. So once all the paperwork's in order, you'll schedule a closing date with the seller. And at closing, you'll review and sign the final documents, which includes the mortgage loan agreement, the title deed, any other relevant paperwork. And you'll pay closing costs, which typically include the lender fees, attorney fees, prepaid expenses, property taxes, insurance, all that stuff. After the closing, the property will be officially transferred into your name and you'll get the keys to your home. So congratulations, at this point, you're a homeowner. A word about closing. If if it's your first time home, you've never been to a closing is basically 45 minutes to an hour of you just signing paper after paper after paper, and you feel like your arm will fall off. Closing is it's kind of exhausting. So just be aware. So what's the typical timeline for all of this? Let's talk through the timeline. So the timeline for buying a home can vary significantly based on different factors, which includes market conditions, the buyer's preparedness, unforeseen challenges. However, for a general idea, here is a typical timeline for the home buying process. First, pre-approval and financial preparedness, about 1 to 4 weeks. This is where you research lenders, gather documents, obtain pre-approval, etc. Next, find a real estate agent, typically 1 to 2 weeks. Interview and select a realtor to help navigate the home buying process. That's about a 1 to 2 week process. Then house hunting could be 4 weeks, could be several months. Determine your must-haves, your deal breakers, schedule visits and showings. Duration can vary based on a lot of factors. So this could be the longest part of it. Next, making an offer and negotiating, typically about a week. Once you find a home you love, submit the offer. The seller might accept, reject, counter, might lead to negotiation. So it could be about a week, maybe less. Then under contract and due diligence, this could be 30 to 45 days typically. Once both parties agree on terms, the house goes under contract. You're scheduling the home inspection, identifying issues, and possibly renegotiating or even backing out if major issues are discovered and not resolved. Then next, securing financing, which is about the same time as the above step, roughly 30 to 45 days, which is where you're finalizing your mortgage application, getting the appraisal, underwriting, etc. Closing is 1 day. You're basically showing up on a single day. And it's about an hour to an hour and a half process, and that's closing. Final walkthrough, sign the paperwork, etc. And then move in. That obviously varies. It depends on your schedule. Could be quick, could be a long time, depends. But that's kind of the general process. So the entire process from pre-approval to moving in generally takes about 2 to 3 months on average. But of course, the timeline can be shorter or longer based on all the factors we talked about earlier. So always work closely with your agent and your lender, and they'll provide guidance tailored to your situation to keep things moving along efficiently. They're incentivized to keep the process moving along smoothly. So, finally, moving into your new home, post-purchase consideration. So moving into your home is exciting. It's a milestone, but there are some additional considerations you might want to keep in mind. So first, take the time to update your address with all relevant parties like employers, banks, utility companies. Set up utilities and services, electricity, water, internet, cable. Consider hiring professional movers or enlisting maybe some help from family and friends. Help make that move as smooth as possible. The last thing you want is a lot of stress when you're going through the whole process of buying a home anyway. So, hiring movers, I think, is a great idea. Honestly, it's well worth it. Take the opportunity to declutter, organize your stuff. Make sure you clean out stuff you don't need anymore. It's a great time to streamline and declutter. Prioritize ongoing maintenance, and inspection. Schedule regular tasks for things like air filters, cleaning gutters, servicing HVAC. Make sure you've got regular maintenance scheduled to make sure that you protect your investment, ensure the longevity of your home. Also, a lot of people don't think about this, but update your estate documents to include your new home. If your state allows it, you might even consider establishing a transfer on death deed for your home so that it passes to the proper beneficiaries in the event of your passing. We don't like to think about possible tragedies, especially during such a happy occasion like this, but planning ahead for unexpected events is always important. So keep that in mind. So update things like your will, your trust, your estate documents. Again, consider that transfer on death deed. And then, of course, make it your own. Enjoy your home. Personalize your space. Have people over for your housewarming. Celebrate the milestone. All that good stuff. So buying your first home is a really significant accomplishment. So, take pride in that achievement. Again, I'm very pro home ownership. I'm a big fan of buying a home. So, it's a great thing. It's building equity. It's building an asset. I'm a big fan of home ownership. So that's the process and the timeline. I've also got a bonus download for you as we wrap up here. So the bonus download is on the article version of this podcast episode. So this episode is episode 195. And if you go to that episode on my website, there's a link to the article version. And then if you go to the bottom of the article, there is a download. It's a PDF download. And it's called What Issues Should I Consider When Buying a Home? And it's basically a flow chart, kind of a checklist flow chart that helps you think through a lot of factors, including the stuff we talked about in this episode, but also just some other little things you might think about as you are going through the process of considering buying a home. So it's a PDF download. It's 2 pages. It'll give you a nice little checklist you can even print and just kind of look over and take with you and study if you want. So that download is at the bottom of the article version here. All right. So with that, hope that has been helpful for you. And if you have any questions about this or anything else, I'm always available. Feel free to reach out, as you probably know by now. My website is elevationfinancial.com. You can send me a message. You can schedule a complimentary money session where I can answer your questions. You can reach out on social media. I'm always around and available to chat. All right. With that, thanks for joining me today. Have a great day. We'll see you next time.